Good evening, I'm Giuseppe Basile, I'm the analyst and trader you can find at the website www.fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, today is Sunday, December the 22nd, 2013. It's very late in the evening, I'm still doing the reviews. This video is the third video of this Sunday weekly newsletter I'm going to send only to my subscribers. And if you want to receive this newsletter, you can go to my website and subscribe for free. So in this video I'm going to review for you four major pairs: the pound versus the US dollar, the Australian dollar versus the US dollar, the US dollar versus the Canadian dollar, and the New Zealand Kiwi dollar versus the US dollar. So let's start from the pound versus US dollar. What you see on the screen is the weekly chart of this pair, and this pair has been in this large, long, 3 years long, and more, almost 4 years long, excuse me, sideways action here on the weekly, and we know that we had resistance in this area very clearly, an area starting in 164.30, and this area acted as resistance a number of times, even recently, and now price is actually challenging this area. On the other side, we have a measured move that initially did not work, failed, but then at some point it started working, as we can see here at the beginning of 2012. And although we had this violation here, price continued to move into this area of support and resistance. So until we get a violation again of one of these levels, either on the downside 148.46, on the upside 171, we have to anticipate market continuing, at least on the weekly, continuing on this in this move, lateral move. On the upside, this level of support starting at 152 as a target 178.83, which might seem very far away now, but you know that could happen if we get weakness again in the dollar. Moving to the daily. On the daily, we have a bullish story to tell, and I want to trace again the level I've been watching in the last few weeks and months, and this has been a trace from the high after the low here, the first high after the low, and we had the participation at 158.50 area here, which brought price into 164.54. As you can see, these levels, they were very well. Program trading actually gets profits at those levels, and we saw this twice at the beginning of the 10th of December here, and again the day of the FOMC. After price got into this 164.50 again, we saw some profit taking, and we continue to see weakness in this market. Now this market has still a second target was at 166.70, so could just continue higher, but we have also to take into consideration that this could just retest and come into this middle 161.66 level on the daily chart, and this is still possible. And here, if we get here, this will be a very high probability level to get long again, as we are in a long, although the weeklies is showing clearly some resistance at this level. But until we get confirmation that a short might be resuming here, we will need to trade this market on the long side. That's the way to go now. So 161.60 could be a level we have to watch and eventually trade on the long side. Australian dollar versus the US dollar, it's a very interesting market. If we look at the long term here, we know that we have the possibility of retesting this 0.8540 level here, and we have been trading this traditional short on the on the daily now for a few weeks, and this short has actually a target just below that, 100 pips below that 85.43. So I would consider 85.43 the target for this market. It's a well-formed setup, and it's continuing lower, printed new lows, and we are going to probably see this 85.43. Now the daily has been a little bit iffy lately. We can always the Fibonacci sorting technique in order to time when the move higher ends, even if we have these violations here, 091.65. And actually I'm going to provide you with a video showing when this move will end. We should probably enter short and try to ride this move lower into the next target. And the next target could be, we have two possibilities here that we need to watch carefully. The first one would be from lows to lows, and this setup has been broken already, so actually we should put this setup aside now. So the next setup short is going to be from this high to the low. So it's possible that this market is moving from trading in extension and trading this traditional move here. So the next level to watch is 89.93. That's very important. That's the level to watch. And however, we also have a sequence of measure move higher on the 15 minutes here that I'm going to show you in a separate video later on. And if we monitor that, as soon as we get a violation, that then we should resume the move lower. Now if we get a violation very close to 89.90 area here, that is going to add to our short case, so it's going to add strength to our setup here. Don't forget to watch the other video I'm going to attach to the newsletter tonight. I'm also going to publish that video in the blog tonight. Moving to the US dollar versus the Canadian dollar, we know that this market is actually seeing some strength from the dollar and the US dollar, and we had this sequence of measure move, and we know that this market has been actually showing so this market actually, the sequence of measure move in this market failed. We had participation 108.30, and then the target at 0.95 was it. The next measure moved failed here, as we can see. So on one side we might think that actually this trend in the Canadian dollar could be actually inverted. If we use the anchor lows to lows again, we see this level of resistance that has been traded a number of times here, 105.66, and it traded mid of this year and in the third quarter twice here, as we can see. And this area could still represent a strong resistance, so we do not assume that we will see 103 or 0840 and then a continuation. Sure enough, if we move above 108.40-41 here, we could actually keep moving higher, which means that the Canadian dollar could weaken towards versus the US dollar, which is something from a macroeconomy point of view could also be positive, as Canada would more easily export more. But obviously the reason for this is probably the fact that the Canadian central bank decided to keep low interest rates for the future, so we don't know how that is going to change. Moving to the daily then, we have I mentioned last week that we could just reverse from these levels. And one level very important the program trading is going to watch is a level that is being an area that is being challenged at the moment, and actually 102.26 held, I believe, here, because 26.8 traded here, so 06.26. So I will not consider this level failed here. We are very close though, so it's possible that then if that happens we will see a continuation lower. On Friday we saw this a move higher and then a reversal here. So not an easy market to trade, especially at this juncture. So we'll just wait maybe a move lower and then a retrace to get and try to trade this market on the downside. And finally the New Zealand dollar versus the US dollar. Typically the New Zealand dollar would actually move in sync with the Australian dollar, but that's not the case. And the fundamental reason at the moment is that this market is driven by agricultural, which are doing very well, while the Australian dollar is driven by mining, and we know that mining is not doing very well at the moment. So what is important here to notice is that there is a trace that was not respected initially, but the market did not continue lower than what we would expect when you have this kind of anticipate when you have this kind of failures. But actually also the shorts failed here, as we can see, and we can see this by tracing highs to lows, and we saw bears not able to keep this market lower, and eventually this 77 level here started working, as we can see, and this shows targets well above recent highs. If we move to the daily, then we see clearly that also on the daily we have this important trace. Actually we have two traces, so I'm going to show you again how I go with this. We can trace from lows to lows and see that we had participation here, and this participation was enough to break this sequence of measure move lower on the daily. And on the other side though, on the daily on a shorter time frame, we also have these shorts participating at 0.8310 area. So the weekly is a long, it's a long. The daily here is a long. We have the 4 hour, it is a short here, so I believe eventually the long will win, just because the long is on the path of least resistance at the moment. So we could anticipate a continued move higher and maybe above this 0.8367 here, and you can use a 4 hour breakout here setup in order to play long if price moves above 0.8263. And this setup, I want you to notice that this setup on the daily, and I will remove this for clarity, 0.8110 as a target, 0.8747, which would help price into that weekly target above. I hope this video is useful. I want to wish you happy Christmas time, you and your family, and I hope to see you refreshed and ready to start again after this Christmas break. Thanks a lot, and have a great week next week. Bye now.